Alright, here on our news, it says analyst says XRP could reach $1 if Bitcoin bottoms at this price. Again, from our news source, Times Tabloid. So, is the 4-year crypto return predicting a guaranteed floor for XRP? Think about the last time you watched the ocean waves hit the shore. They pull back, completely emptying the sand, only to crash forward even harder a few seconds later. The global crypto market breathes in the exact same way. It is a predictable mathematical pulse that has kept moving without breaking since the birth of Bitcoin. So right now, many traders are staring at their screens in an absolute panic as the market slides. But what if this terrifying drawdown isn't chaos at all? What if it is a completely normal, scheduled retreat before a massive advance? A well-known crypto commentator right here, Levi Rietveld, recently posted an eye-opening breakdown looking back at the market's history since 2011. He showed how every single major cycle has followed an identical rhythm. More importantly, he used this historical blueprint to pin down an exact price target for both Bitcoin and XRP over the next few months. If his data is right, we are marching toward a specific macro floor that could set up the buying opportunity of a lifetime. Right? So let's start with our very first question about why does Bitcoin's historical blueprint hold the key to XRP's destiny? So, to understand where XRP is going, we have to look at the primary engine driving the entire digital asset space. Levi Rietveld right here traces the market's steps all the way back to the early days. From 2011 to mid-2013, the market climbed steadily until it hit the historic $1,000 mark, only to face a brutal drawdown afterward. The exact same pattern repeated up to 2018. The data shows that a typical bull cycle stretches out for about two full years, while the painful bear markets that follow usually lock down the charts for 12 to 14 months. Even the absolute shortest bear market in history lasted 11 months. Right? Now, here comes my personal opinion. I find this cyclical data deeply comforting. When you step away from the daily noise and look at the macro timeline, you realize that the fear we see on social media right now is purely psychological. The market isn't broken. It is just keeping time. If history tells us that a pullback lasts roughly a year, then trying to fight the current trend is like trying to stop the tide. Instead of panicking, the smart play is to study the rhythm and prepare for the shift. Right? Now, our next question is a $50,000 Bitcoin the ultimate shield against a market crash? During the worst case scenario, the market bottom completely erased 90% of its peak value on the 2015 cycle bottom. Right? By comparison, our current environment is incredibly mild. We have only dropped close to 50% from the absolute highs of this current cycle. Because of this, Levi Rietveld estimates that Bitcoin is on track to find its ultimate cycle bottom right around the $50,000 mark. He believes that because this correction is much less severe than past historic crashes, it represents a highly fortunate scenario for strategic accumulation. Now, again, here comes my opinion. I completely agree that a $50,000 floor for Bitcoin makes total sense here. The structural architecture of the market has changed significantly since 2015. We have massive corporate entities and institutional rails holding up the floor now. A 50% pullback is a healthy correction, not a death spiral. So to me, seeing Bitcoin hold this region proves that the asset class is maturing, giving us very clear, stable foundation to measure our risk against. right? Now, will XRP value itself at $1 when the market floor is finalized? Here is where the data gets incredibly specific for the XRP army. According to the framework shared by Levi Rietveld, when Bitcoin hits that $50,000 macro bottom, XRP is highly likely to trade right around $1 or perhaps just a hair lower, right? Rietveld didn't look back in his video, stating clearly that treating this specific area as anything other than a premium entry point is probably a huge mistake. However, it is worth noting that the broader trading community is split. There are other voices in the market setting much deeper panic targets, calling for Bitcoin to drop all the way to $28,000, which they claim would drag XRP down to 60 cents. Now, my perspective aligns much more closely with the $1 target than the ultra bearish 60-cent doom scenarios. XRP has spent years building a massive wall of psychological and structural support around the dollar region. When a major asset meets a heavy historical support level at the exact same time, the broader market finds its macro bottom. That level acts like armor. The bears can throw everything they have at it, but the order blocks at $1 are likely way too thick to break. Right? Now, are the next 4 months the final clock for this entire correction? Time is just as important as price when you are tracking a financial cycle. Based on the exact duration of every previous bear market since 2011, Levi Rietveld calculated that the current downturn is slated to find its absolute final floor within the next 4 months. This gives the market a strict deadline to finish its downward movement before a potential macro reversal begins to take shape. So, my opinion, this 4-month window is the most critical timeline to watch right now. In my eyes, this period is going to be a classic war of attrition. The market is going to grind sideways and downward just long enough to break the patience of short-term traders. So as a market observer, I welcome this timeline because it gives us a clear expiration date on the bearish sentiment. If you know the storm has a high probability of clearing in 4 months, navigating through the rain becomes a matter of strategy rather than stress. Alright? Now, here is my overall conclusion about this. When you weigh all the data, the picture becomes remarkably clear. The digital asset market is not moving randomly. It is following a strict 4-year rhythmic cycle that has successfully governed every major price movement for over a decade. While the short-term noise can feel overwhelming, anchoring your perspective to the macro framework changes everything. If the historical timeline holds true, the next 4 months will mark the final stage of this correction. Whether Bitcoin finds its ultimate floor at $50,000 or XRP stabilizes at the $1 mark, the message embedded in the data is identical. Structural pullbacks are a mandatory part of healthy market architecture. By looking past the immediate volatility and focusing entirely on the cyclical clock, you can transition from a reactive participant to an educated observer, ready for whatever the next phase of the cycle brings. Alright, and this ends our video. Thank you very much for watching and see you on the next one, or you might just as well watch next this recommended video right here.